So let's resume the topic of cost accounts. So we completed the fifth transaction and we are now moving towards the sixth transaction. So what is it written here in the sixth transaction is that 14,400 wages were paid by the payroll department. So now you must remember this formula. You have to remember this formula that formula for calculating of the net pay. So there is the amount known as gross wages and then we less the income taxes. And then we less the benefit contribution, which you can say like is like the pension contribution to the pension of your employee, so benefit contribution, and then we come to the net pay or net wage, you can say, or we can just write it as gross pay. So gross pay is like the total amount that you have earned. Now you have to remember these terms that these definitions that what is the gross pay. You have to remember that this is the amount earned by the employee. This is the amount earned by your employee. And what is the net pay? Net pay is the amount paid to the employee. Net pay is the amount paid to the employee. Right? So you have to remember these definitions, very important. So gross pay is the amount earned by the employee. So any amount that the employee earns, it does not get paid to it. Why? Because you have to deduct some important deductions, some important things. You have to deduct these important things. What are these things? You have to deduct the income tax of your employee because normally the government's policy is to not collect the income tax from the individuals by directly from them. The policy is to is for the organization to for them to collect the income taxes of their employees before paying them. So the government collects the tax from the organizations of their employees. So for organization point of view, you have to deduct the income tax of your employee before paying them their salary. So once you have deducted that income tax, you have to pay that amount to the income tax authority. So you are deducting this income tax, so you can pay this amount later to the tax authority. So this is obviously employees' income tax, not your income tax. So income tax is any tax that is that is on the income of an individual or any business. So obviously the employee's income is their salary. So on salary income tax is deducted. So this is deducted by the organization and then later paid to the income tax authority. So this is how things work. This is how income tax work. So gross pay is the amount earned by the employee. So then you deduct the income tax and then you deduct the benefit contribution. So what is the benefit contribution? This is the amount. This is the amount that you have separated from the amount earned by the employee from the payment amount. You have separated this amount just like the income tax, so you can pay to the pension authority. So, for example, the pension company, the company that is maintaining the pensions of the employees of your employees, so you have deducted this amount, so you can pay this amount to the pension or pension company. So because it is maintaining the pension of your employee, so this is just like the income tax, you can say. So for example, an amount earned is 100 amount has been earned and income tax is 20%. So you have to deduct this amount minus 20 you have to, and then benefit contribution. The pension amount is, for example, 10% of the employee's salary. So 10% is transferred to the pension of the employee because of course he wants something to some income after the retirement of him or her. So net pay would be after deducting these amounts. So 100 minus 20, 20 went to the taxes and $10 went to the to your pension, for example. So now $70 are being now paid to the employee. So right, so you have to remember just these definitions. These definitions just make things very much easier for you, very much simpler for you. So gross pay is the amount earned by the employee, and net pay is the amount paid to the employee. So now let's get back to this transaction, sixth transaction. So what it is written here, that's 14,400 wages were paid by the payroll department. So you have to note this word that these were paid by the payroll department. So is this the gross wage? No, this is the net pay. This is the net pay. Why? Because net pay is the amount that is being paid to the employee, that gets paid to the employee. Gross wage never gets paid to the employee because we have to do the income tax reductions, we have to do the benefit contribution, pension reductions. So obviously, gross wages will never get paid or never get paid. Only the net pay amount is the amount that is get paid. So right. So 14,400 is the net pay. So we can write it here like 14,400 is the amount that has been paid to the employee, right? So then it is written here that 12% of gross wages are income taxes. So income tax is 12% and 8% are employee benefit contributions. So it didn't tell us about the amount of the gross pay. We have to calculate it by ourselves. So 12%, it has told us that 12% are income taxes and 8% are benefit contributions, right? So you can just write here. So if income taxes are 12% and 8% is benefit contribution, then what percentage would be net pay of gross pay? You have to remember this another thing, that income tax are presented as percentage of gross pay. So 12% of what? 12% of gross pay. Benefit contribution is 8%. 8% of what? 8% of gross pay. Right? So how much percentage would be the net pay of gross pay if 12% is income tax and 8% are benefit contribution? So obviously the answer would be 80%. Why? Because 12 plus 8% is equal to 20%. 100% gross pay is, if gross pay is 100%, 100%, why? How do we know it is 100%? Because you have to remember this, that gross pay is always 100%, right? So gross pay is 100%, because this is the amount of which the income tax is being as mentioned as percentage of, right? So that is why gross pay are always 100%. So 100% is the gross pay and 12% are income tax, and minus benefit contribution 8%. So we come to the 80%, which is the percentage of net pay. So we can write it like this, that net pay is equal to 80% of gross pay. Why? Because gross pay is 100%. So now we can just write the amount. So net pay is 14,400 is equal to 80% multiplied by gross pay. So now we can just rearrange this formula to find the gross pay. So gross pay will be equal to 14,400 divided by 80%. So very easy. So gross pay is 18,000. Now we know that gross pay is 18,000, and then income tax is 12% of it. So multiply by 12%, 18,000 multiply by 12%, and then 18,000's 8% are, sorry, 18,000's 8% are benefit contribution, right? So now, does this make sense overall? So let's calculate. So the answer after deducting income tax and benefit contribution, the answer should come to 14,400. So let's see. So 18,000 minus 2160 minus 1440. So we have come to the answer of 14,400, which was the amount that was paid to the employee. So yeah, we did our calculation right. So once you have done these calculations, you have gotten these figures. Now only then you can post this transaction, post the double entry for it. So what would be the double entry? So double entry would be, you have to debit the labor account. Labor account or salaries account or wages account. By what amount you have to debit the labor account? So you have to debit it by the cost incurred related to employees, right? So we can just read the definition here. So what is the labor or wages account? What does it do? Gathers all costs related to employees for a period. So what is the cost related to employee to the organization? Is it the gross pay amount or net pay amount? So obviously the cost incurred is the 18,000, because this is the amount that was earned by the employee. So this is the cost to the organization, not the net pay, because your employee earned 18,000. You separated that 18,000 and put it on a table, right? And then now you are going to deduct the income tax of your employee, and you deducted that amount of income tax and put it on another table, right? And then you deducted the benefit contribution and you put it on another table. So obviously the remaining amount you are going to pay to the employee, right? So obviously the reductions that you have made these are not going to you, obviously. These are going to the income tax authority and benefit contribution authority, and these are the amounts related to your employee. So the cost incurred to you, to the organization, is the 18,000 amount, not the 14,400 amount, right? So this is how things work. So the cost that you have incurred is the 18,000. So or you can just you can understand everything that I have said, or you can just remember that that we always debit the labor account with the gross wage amount. Just wrote this, right? So it just becomes very easy for you. So you can just remember that we have to always just debit the labor account with the gross wage amount, with the amount of gross wage. So then credit, we have to write the name of the opposite account. So cash, because of course you have to now you can remember this, that we credit the cash account with the amount of the net pay always. So gross pay amount we is the amount that we debit the labor account with, and the net pay amount is the amount for which we debit the cash account, credit the cash account with, right? So credit, we are going to write 14,400 here. Why? Because this is the net pay amount. So you can just wrote this. You can just learn this by rote here. So then we have the credit. We are going to credit now the other accounts, the income tax liability account. So you have to remember this transaction, this double entry like this as it is. So of course, not written in the notes or book. So just wrote learn this transaction. It just becomes easy for you that way. So credit, benefit contribution, liability. Because why are we crediting? Why are we creating a liability here? Because this is the amount that you separated to letter pay to these authorities. So you have separated the income tax of your employee, put it on another table. Why? Because you have to now pay this amount to the income tax authority at some later date. So that is why we are creating a liability, because this is the amount that you are going to pay in the future. So what are we going to write in front of it? In the amount would be 2160, and here the amount would be 1440. So does the debit equal to credit? Yeah. No, it is not being equal to it. This is because we done the calculation here. We can just take it somewhere else. This will be fixed. Right. So let's see. So yeah, debit equals to credit. So this is the transaction related to labor, and you can just you have to just remember this transaction. You can just if you find it difficult, then you can just rote learn it. So the thing you have to remember always is that the labor account is debited with the amount of the gross pay. I'm repeating, the labor account is always debited with the amount of gross pay. Labor account is always debited with the amount of gross pay and not net pay, right? And then the cash account is always credited with the net pay amount. And for the remaining things, you have to just write these amounts in front of them. So very easy. You can just say that this is the gross pay, this is net pay, and this income tax, this is benefit contribution, right? So you can remember it like this also. So let's put these things on the D account. So we have to make the labor account now. Labor account. So what as the labor account is being debited with 18,000. So we have to, because these are the cost related to employees that were incurred. So 18,000 we have to debit it with. So how are we going to debit it with 18,000? We are going to write it in 3 lines, because there are 3 accounts that are being credited. So the cash account is being credited, and then income tax liability account, and then benefit contribution liability account. Right? So these 3 accounts are being credited. So 14,400, and then 2160, and then 1440, right? So we can just sum it up. So yeah, we debit the labor account with the 18,000. So cash account, income tax liability account, and the benefit contribution liability account, these are not cost accounts. That is why we are not making T accounts for these. So now let's get to the seventh transaction, and this is related. This is going to be related to the second stage of the maintaining of the cost accounts. So let's read these. Read the seventh transaction. Wages were analyzed into direct and indirect elements. 40% were direct, 35% were indirect related to production, and 25% were indirect related to non-production. So what do we do in second stage? You must remember from the previous video that the second stage is done like this. Wait a second. Right. So under second stage of maintaining the cost accounts, all direct costs are transferred to the work in progress account, and all production overheads are transferred to the production overhead account, and all non-production overheads are transferred to the operating expense account. So all the amount, the total amount that we debited in the labor account was 18,000. So now all of this 18,000 is going to be transferred. Some of it is going to be transferred to work in progress if it is direct cost, and the indirect labor related to production is going to be transferred to the production overhead account, and the indirect labor related to the non-production activities are going to be transferred to the operating expense account. So all of the 18,000 is going to be transferred some in any of these three accounts in these three accounts, right? So labor account would be emptied. 18,000 were debited, and now 18,000 would be transferred, right? Because on the material account, balance remains on the material account, not labor account, because it is also an asset account and it is a pure expense account, right? So let's do this transaction. So the seventh transaction it is, wages were analyzed into direct and indirect elements. So 40% were direct. So the direct element will be transferred to where? Work in progress account. So debit work in progress account and debit production overhead account with the amount of labor that was related to production overheads, that was related to production and was indirect labor, and debit operating expense account, and then credit from where it is being transferred from the labor account, right? So what is the total amount that is being transferred? It is 18,000. You cannot write 14,400 there because 14,400 is not the cost incurred to the organization. We have to write the all the total amount that is being debited to the labor account. So obviously total amount debited to the labor account is 18,000. So credit the labor account by the total amount, that is 18,000, and now we are going to share this 18,000 to the work in progress, production overhead, and operating expense. The direct labor would be debited to the work in progress account. So what is the direct labor? It is the 40% of gross wages. So 40% were direct. So 18,000, 40% is equal to this amount, 7,200, and 35% were indirect related to production, right? So 35% into 18,000, and then 25% were indirect related to non-production. So 25% into 18,000. So completed. So this is for the seven transactions. So now we have to put it in the T accounts. So work in progress, we have to debit it by 7,200, right? So 7,200. And then we have to write the name of the opposite account that is now being credited in this transaction. It is the labor account. So labor. Then production overhead account, it is being debited 5,300, and the name we should choose is the labor account, the account that is being credited. And the operating expense account, we didn't make it, so we can make it now. Operating expense account, right? So in this transaction, operating expense account is being done what? It is being debited. So we have to choose the debit side, left side 4,500, and we have to write the name of the opposite account that was being credited, and was labor account. So yeah, so now what are you going to do with labor account? We have to use the credit side because it is being credited. So 18,000. So we have to credit it by 18,000, and the name we should use are the names of debit accounts. So the accounts that are being debited. So the three accounts are being debited. So no problem. We can write it in three lines. I can just copy paste it here. I can use the values. So Now, work in progress, and then optimization slide. So now a very important thing is that now you have to note this that right. So now note this that 18,000 was debited in this account and 18,000 was credited to this account. So this means that this account has been now been emptied. Everything that came left from this account. So you can say that this account is cancelled, right? So this account has been emptied. So this account is now closed for this period if the period has ended. So this was the seventh transaction. So in the next video, we will do the eighth transaction and ninth, 10th, 11th, 12th, 13th, and 14th transaction. So these are very similar in nature and very easy. So this transaction was a bit tricky, a bit difficult because it required understanding of a previous concept of gross wage and net pay calculation. So if you already knew that calculation, then it should have been much easier for you. So that was it. This was this transaction. This sixth and seventh we did in this video, and the other transactions are going to be very much easier than this. And then the difficult transaction and very important transaction would be this one, 15th transaction, right? The other remaining transactions, 16, 17, 18, are very much easy. So we will meet in the next video, inshallah. Hafiz.